In today's video I want to show you a deep-level analysis of the Euro 1-hour timeframe. As I already pointed out in previous videos in the channel, the best trading strategy is not necessarily just one single strategy. It's a combination of different strategies that attack the market in different angles. That also does not mean that you cannot use one single strategy to trade successfully, but if you have many different strategies under your belt, you will be able to see the market through different lights. The major advantage of this is the capacity to build trading contexts in a more elaborate way. As far as I know, there are 5 different levels in which a trader can see the market. The price action reading dimension, the momentum analysis, the manipulation dimension, the econophysics dimension and the advanced Linework dimension. In today's video I will try to show you the surface of each of these 5 dimensions so you can have a taste of what it feels like to analyze the market in a multi-layered fashion. This analysis is fairly complicated, and it requires that you pay full attention to all details, otherwise you will get lost very quickly. Without further ado, let's begin to analyze the major and minor market vectors of this market so we can get a taste of the relationship between buyers and sellers and their hierarchy of power. From number 1 to number 4 we have higher highs and higher lows in what appears to be the large fractal of this market. Observe that in number 1 there is an expanding pivot that later became the center action of this chart, which is not a coincidence at all. Number 3 is confirmed and solid market structure because number 4 surpassed the high number 2. That means that buyers from number 3 have proven themselves. However, observe that in number 5, sellers violated the low number 3, which means that sellers from number 4 are stronger than the buyers from number 3. Notice that in 3 I drew a turning point line that shows roughly speaking where the buyers were supposed to appear again. Observe how this same line is used as resistance in a few candles before number 5, which is a detail that validates our observation so far. In number 5 we have another problem, which is the probable presence of manipulators. Notice that when price breaks the low 3 in number 5, many traders trigger a sell position. Market makers already know that many people will do this, so they take advantage of this liquidity pool right below number 3 to enter the long opposite position. We can tell that this was performed by market makers by noticing how organized the movement after number 5 was. However, that's not the manipulation I want you to focus on. I want you to take a look at the manipulation in number 7, which happened in the exact turning point line drawn from number 4. Number 7 also happens to be a fractal candle. This triple convergence is not a coincidence and it proves that you could take advantage of the manipulation without even knowing about it if you understand other reliable ways to see the market. Observe that candle 7 pokes the high number 6 and closes below it in a rather suspicious way. That was probably some market maker trying to trigger retail traders to the upside. When price hit the level of high number 6, many buy orders were triggered. All that the market manipulator had to do was to sell enough to smack the market down to the level where candle 7 closed. That's enough to make the retail traders in their long position a little desperate to close their trades with a small loss. After candlestick 7, the market tilts its flow to the downside using this manipulation in number 7 as an axis. Slowly but surely, the retail traders end up getting what the market is going to do, but the market makers are already in their incredibly massive short positions. Number 8 happens to confirm the new flow of this market to the downside because 8 is lower than 5, which makes 7 a new market structure. Oddly enough, the most important market structure that marks the flow change is exactly the high that was used to manipulate the market. In number 9 we can see the market returning to the small zone that marked the moment where retail traders finally realized what the market was going to do. Number 9 also happens to be a fractal candle that could be used as a trigger to the downside. Observe that there is a whole story happening between number 4 and number 9. It's not just highs and lows. I want to grab your attention now to the line work surrounding this manipulation area. The first new evidence of a flow shift from the upside to the downside happened in low number 5 in relation to low number 3. Observe that I drew a down-sloping black line from number 3 to number 5, which can sometimes be used to describe the new angle in which the new market player is going to operate. I extrapolated this line respecting the same angle to the high number 4. Observe how this extrapolated line meets the high of number 7 almost perfectly. This is not a mere hindsight analysis. These lines make sense within the story we are trying to understand in this market, meaning that they are not randomly drawn. They are drawn in key points and extremes of price action. Notice also that I extrapolated this same line with an equidistant measure to the downside, forming what's called a reaction line. This lower reaction line crosses the tail of candlestick number 10, which happens to be a fractal candle as well. This candle is also in the buy zone that was marked in the extreme lower left corner of the chart. The point I'm trying to make here is that price action is like a complicated piece of music played by an orchestra. If you pay close attention, you can find several types of symmetries that fit one another perfectly. As a last tease for your imagination, I drew a blue pitchfork using the 3 green circles as the pivots. Notice how perfectly price touches and leaves the pitchfork line in the small blue square in the lower right corner of the chart. Notice also that the upsloping pitchfork line crosses exactly the level of the turning point line drawn from the large buyer's zone. Pitchforks can be used to pinpoint these extremely precise price extremes depending on the situation. Once again, price action is full of hidden symmetries that can be described with advanced line work like you see here in this example. However, there is an infinite number of lines that we can draw to reach these conclusions, so we need a way to filter most of them out, otherwise our chart would be impossible to analyze. Intuitively speaking, meaningful lines can only come from meaningful places on the chart. That's how we can begin to analyze the market in this advanced form. Interestingly enough, we always have to come back to the basics of highs and lows and the storytelling of the market logic in order to access these other advanced dimensions of price. If you try to draw such lines just for the sake of finding precise points, you will fail most of the time. You must first recognize the market logic, and then draw the meaningful lines. As you can see, trading is a lot more than watching simple indicators crossing over on a chart. This piece of price action alone would probably need an hour to be fully explored and stripped down, so I will stop at the surface of the analysis for this video. If you enjoyed this video and want me to keep producing them, don't forget to hit the like button, subscribe to the channel and leave your constructive feedback in the comment section. Thank you for watching and I hope to see you in the next video.